All right, everybody. I'd like to welcome you to our January update of our Defender Capital Management. My name is Daniel Drystra. I'm the current president, and I'm joined by Taden Van Beek, our club portfolio accountant, and Brandon Hanson, our portfolio economist. So we're going to take you through a quick portfolio report to go through how some of our holdings have performed through the month of January, and then we're going to discuss some of the economic situation that we're in and the impacts on our portfolio. And then finally, I'll take you through a little bit of a club update, what's going on in the club and what we're looking forward to doing in the future. So we're going to get started with Taden.
All right, so January was a pretty good month for our club. Although we slightly lost the S&P, we were still up 5.81%, which is still really good. The main reason that we lost to the S&P was just because of stocks like Tesla and AMD, stuff that we don't own that went way up. But also that same stuff prevented us from losing a bunch of money during 2022 because they were way down. Right now, we are sitting at $60,000 cash, so we are looking for something to invest in. Hopefully, something more aggressive and more growth, as our current purchases this year have been kind of preparing for a recession and pretty safe purchases. And another notable thing is we are above $1 million, which we haven't been there in probably almost 8 or 9 months. So that's a pretty big accomplishment.
Now we're going to talk about some of our biggest movers. So as you guys can see with the visual, we have Amazon, AbbVie, Disney, and Qualcomm, and the three of us are going to take you guys through just a quick overview on why this is.
So the first one we got is Amazon. They're pretty beat down. They were up really big during the pandemic, but they've since gotten beat down due to things like poor earnings and just the overall market conditions. One point they were sitting around $82 a share, so it's good to see them back up a little bit. They were doing pretty good until their earnings report. Their earnings report came in just a little bit low, which kind of sunk them a little bit. You can kind of see that towards the end. But overall, they're still up more than 20% during the month of January, so that's still extremely good.
Yeah, AbbVie returned pretty low in January, but during 2022, 2-year end, it was one of our best performing stocks. The recent decline is generally due to the expected Humira is one of their business segments, and it's worth about 1/3 of their revenue, and that revenue is expected to decline as the patents for it are expiring. So they're rotating into more M&A activity in the next few years. And then they're going to rely on new immunology drugs, especially that should replace this revenue, but it's a little bit uncertain. So we're going to keep a close eye on AbbVie in the future. But overall, in 2022, it was a great performing stock. It's just had a poor January return. But looking to the future, we're pretty confident in the management team there that they're going to be able to find and develop new drugs that are successful. So we're going to continue to hold AbbVie for the time being.
Our next biggest mover was Disney, and the big reason for this is the CEO shift in leadership for Disney. Bob Iger is returning to the throne of Disney and will be recapturing his position as CEO. So they are projected to, or investors like this move, and Bob Iger has helped Disney reach its success today, and their earnings will report tomorrow. So we are curious to see what happens when the earnings post February 8th. But yeah, there's a lot going on at Disney, and they're projected to raise their cents per share by 15 cents. So that is exciting, and we hope to see that post officially on February 8th.
Qualcomm, our biggest mover during the month of January. Semiconductor stocks got really beat down last year. Demand just kind of fell off a cliff, so did their stock price. A lot of reasons to look forward to their 2023, just coming out with their 8th gen or Snapdragon 8 Gen 2 chip, which you'll see in all the newest flagship Android phones. And just a lot of good things coming for them. They make a lot of AR or ARM CPUs, which you're starting to see become more and more popular. So we're really excited with all the future growth prospects with this.
As we look into the Federal Reserve news, the February meeting just occurred for the Federal Reserve Board, and Chairman Powell has just discussed a few of their plans moving forward. So they did raise the target federal funds rate range by 25 basis points, or 0.25%. So that is now at 4.5% to 4.75% for the month of February and time being. Chairman Powell also said they are still expecting a couple rate hikes as inflation is not curbing as much as they have hoped. But this is the least significant increase in the federal funds rate in the last year. So that is looking good coming through. They're hoping to curb the rate increases by June. But Chairman Powell did note in his most recent speech that it is very difficult to tell with this uncertainty, as we've never had a recession quite like COVID. And we're just waiting for the market to respond. And there are a lot of conditions that go into that, such as the Russia and Ukraine debacle there. And there are just a lot of uncertain times ahead. As we move into the job report, we are looking very good with unemployment numbers. Unemployment is at its lowest since 1969 at 3.4%. Before COVID in February 2020, we were at 3.5%. So we are below that unemployment threshold, and we are still approaching the efficiency in the job market that we had in February 2020. We're at about 2.1 million jobs left till we reach our February 2020 mark in terms of numbers of jobs. When we look at that, there is some worry there because a lot of jobs have shifted online, and companies are somewhat worried about this. And the Fed is more concerned just because unemployment being so low isn't helping with inflation. And we're just hoping to see potential 4% unemployment rate as we start to smooth out the rest of the year.
Yeah, so finally, we're going to give you just a little bit of a club update, what we've been up to in the past month. So obviously, January is year end. So I completed the annual report with the help of our club accountant, Luke Rankin. So that should have been sent out recently. And if you'd like a copy, just send me or Professor Feenster an email, and we can absolutely get that to you. So that is finished up. And then this coming month, we're going to run a workshop for our Excel spreadsheet for the freshmen. So our incoming students that are interested in, learning more about the club and that are a little bit more keen are going to come and learn for a couple of weeks, I think, probably 2 to 3 weeks every Monday to just learn about how we evaluate stocks and the process for that. And then finally, we've got a couple of speakers lined up. Our vice president, Isaiah, he's pulled together 2 people, and I think we're going to I've got one more in the back pocket, I think, that I'd like to see here. But Darren is the vice president and investment officer at American Investment and Trust here in town. And then we have Daryl Bowenkamp, who's with Vermeer Corp, and he worked in their international business development team. So we're very excited to hear from these 2 guys. They're both very successful in their respective fields, and their careers just give us a little bit of inspiration, like, hey, we can do that. It's cool to see what Dork grads are doing and what other people are doing as well. So we're excited to hear from them in the coming semester. So thanks for watching. That's it from us, and